All right, so we can start with just mapping out what kind of business is this. Let's take a look. It looks like $500 million in revenue per quarter, so that is roughly $2 billion, right? Of course. All right, so we got, let's do license, maintenance, and revenue. One is higher margin than the other, I'll let you guess. All right, license 208, 981, down year over year, that's not good. But if they're going to sort of software as a service, that might be normal. It's not cast judgment just yet. But in general, it looks like revenue is not growing like a weed. Oh, it's not bad. What's that, like 8%? What would you say? 6%. Definitely not a weed. Leave my Slack alone. Stop asking questions. Yeah, well, of course we're going to try to break down revenue as much as we can. All right, let's look at COGS. So COGS is cost of goods sold, COGS. We're going to not include amortization there. And so gross margins are around 90%. Pretty awesome if you're Ansys. Okay. We'll do some crypto at some point. Right now I'm focused on Ansys. ANSS is the stock ticker. ANSYS is the company. All right, so two operating costs. They have SG&A and R&D. Real simple. So SG&A, so Salesforce and all that, and management, professional services. R&D is the guys that make the software. That also goes in COGS, by the way. The actual people making the actual software that gets sold, but R&D is, it's weird, you know, what counts as research and what counts as cost of goods is something a lot of software companies have to contend with. I'll let the accountants sort that out. Margins are what we care about, right? All right. All this makes sense. Again, not including amortization. They have some interest payments. Let's factor those in. They have this other line. I'm probably going to exclude that line. They have taxes, 24,094, and now you have net income, which is around 100 million. So what would you pay for 100 million quarterly net income? That's the question. That's what, 400 million a year, right? What would you pay for 400 million a year of cash flow? Would you pay 8 billion? Right, that would be 20 times. Felix, what's up, man? Terry? Terry, the greatest programmer who ever lived? I use Temple OS. Wasn't Terry a little bit racist? Little bit racist. All right, so the company didn't grow last quarter really very much. We still have a lot more to do, so just bear with me. I'm going to try to fill out the balance sheet real quick. All right, cash, AR. Maybe I'll put this over here. You guys can't see it. It'll go a little faster. looks like a growth by acquisition given all this goodwill they have. All right, these are the assets of the company. That goodwill is not tangible, so really $2 billion in assets. Everybody understand how goodwill works, I hope? Good, because I don't. I'm just kidding, I kind of understand it. Made an operating system from scratch. So deferred revenue is very important. Does everybody know what deferred revenue is? It's very important for software companies. It's not so important for anybody else. But deferred revenue is sort of the opposite of accounts receivable. It's, help me out here. Accounts receivable is sales you've booked but they haven't collected yet. Deferred revenue is sales you've made but you haven't booked yet. Well, not sales you've made, money you've collected, but sales you haven't recognized yet. So deferred recognition of that revenue, but you've received cash for it. So you will book revenue in a future time. And for software, that's very common. So you need to sort of watch that line for software company. All right. Is it normal for companies to have debt on their balance sheet? Yes. It's not like personal debt, which you'd never want. Companies get into debt positions strategically to acquire other companies, to do whatever. Of course, debt is a liability. There's no doubt about that, but you generally shouldn't look at debt and say, oh, this company has debt. This doesn't make any sense. You know, it's companies that have a bigger, strong balance sheet with no debt, of course that's fine, but even the strongest, biggest companies will get into debt to do various things. Like buy other companies, do a share buyback, etc. It all depends on your so-called cost of capital. COC, cost of capital. Yeah, you can have large amounts of cash in case of a bad, in case of a rainy day, so to speak, and that's not a bad thing, but it's not unusual for most of the S&P 500 to actually have a net debt position. Buffett is smart in the sense that, he wants to save for a rainy day. But if you have targets to acquire, I don't think Buffett would have a problem getting into net debt. I think he generally doesn't like it because of the kind of flexibility you forego. But I also think that if he had the deal of the century, he would take it and he would go into net debt. Even though he sort of said that he wouldn't, I think he would. What Warren says and what Warren does are two different things. And he's sort of retired now anyway. All right, reported net income. This is for 6 months. So I'm going to do 169,788 minus this. In fact, I'm going to wait for this, I'm going to go to Q1. So let's go to the Q1 10Q. And again, you go on sec.gov to go see this stuff. And I've got this second 10Q open. All right, so growth here was a little better, it looks like. Yeah, 425 in revenue. Last quarter was 132, 604, 236, 22, 363. So what do you think that is? Like 15%? 17%. Nice. So yeah, the company, if you blend those two, right, that's still pretty good growth at 10-12%. All right, let's look at cost of goods. So this is sort of a competitor to the startup I'm building called Druglike. Druglike has bigger designs than just making simulation software for small molecules. It also one day wants to make simulation software for everything. So if you can simulate it, we're going to help you. Yeah, biologics are just large molecules, right? They're harder to simulate, but you can simulate different things with antibodies and things like that. Like I said, if it's a physical system, I'm interested. ASIC design is definitely the you know, Dave, that's the granddaddy, right? That's how Cadence and all those companies are worth so much. It's kind of remarkable how much they're worth. All right, these guys have some non-gap adjustments, but let's leave those alone for now. Quantum computers don't really exist yet, Frank. How are you doing, though? One day quantum computers will exist. For now, they're kind of very weak. They don't compete with transistor-based computers, but I'm watching the quantum computing space pretty closely. I have some friends in that space. It definitely is one day going to do different things, and for simulation especially, it's going to be quite important. Sometimes it's a good idea shorting drug stocks, sometimes it isn't. Depends on the stock. Like, look at, what's that company? I know the CEO, actually. Cassava. That was a pretty good short. All right. So in America, almost all financial statements on Shul are consolidated. So there's not like other countries where you have a parent and then parent reporting and then subsidiary reporting and consolidated reporting. In America, you just have consolidated reporting. So Ansys, this company here, must have 100 subsidiaries, but they only report the consolidated numbers. That's a feature of the American financials. I know in other countries, sometimes you'll get subsidiary accounting, which doesn't make too much sense if you ask me, but that's how other countries do it. All right, 4363951. All right, so we got a balance sheet that balances here. We've got net cash. All right, so now we're going to do the all-important cash flow statement. Zoetis is an interesting company. I don't have too much strong of an opinion. Probably more expensive for my taste, but the animal healthcare market is big, and I'll just make a shout out to my cat Trashy. Love you, Trashy. Love you. Love you very much. All right, enough of that. If Trashy were here, she'd jump on the keyboard and stop me from trying to work. She'd say, "You don't need to work, you just need to pet me." But Trashy, so I see you moving your fingers, just move them right here. Right here, move them right here, and right here too. She gets jealous of the keyboard. Why are you petting that keyboard so much? I'm the cat here. One day I'll have a dog too, and the dog will feel the same way. I'll tell the dog, "Shut up!" That's what I used to tell Trashy. She used to start meowing and meowing and meowing. I'd say, "Shut up, kitty!" Alright, there's the cash flow from operations, much higher than net income, which is interesting. Depreciation of intangible assets or amortization. I'll just say D&A. Lease, deferred taxes, bad debt, stock-based comp, other working capital. All right. I should probably do the rest of the cash flow statement. Acquisitions. Yeah, Cadence is a big one, man. And then don't forget about their competitor, Synopsys. And then, of course, Hexagon. And there's others. You know, the IC design space, simulation space is so big. It's like shocking. You know, but it doesn't, in some ways it doesn't shock me, because if you go back to von Neumann and Univac and Edivac and all that stuff, like even the Manchester, like the first use cases for computers were what? Simulations. Now the world's changed quite a bit, but scientists still need the stuff for simulations. He knows Neumann. Yes, von Neumann, he was my uncle. He was not my uncle. Nikola Tesla might have been my uncle, but that's about it. Yeah, so is Alibaba not getting delisted? Is that what's happening? That'd be good. We can beef with whoever you want me to beef. Is the screen black? I hope not. Of course I play Wobox. Who doesn't play Wobox? Alright, buybacks. Restricted stock withholding taxes. That's usually related to proceedings of ESOP. Alright. Interesting these guys don't do much cash management on the balance sheet. I kind of like that, to be honest. These companies doing all these complex treasury operations. Alright, now we have FX. And then we should add all these up and you'll get something called kind of change in cash. So this is 10 million. So they swept kind of all the cash flow into buybacks. If you add up these three numbers, cash flow from operations, cash flow from investing, and cash flow from financing, you kind of get a sense for what where the cash is going. So they made money in their business, but they spent it buying back their stock. And that's why the cash didn't go up from last quarter. Now we don't have that here. And here you'll actually see the cash went down, even though they made cash flow from operations. I am going to be on the Adam Friedland podcast. Thank you so much for mentioning that. I've been in touch with them. I hope you guys are fans of that podcast. I don't know it that well, but I've been recommended to go on it, and I will be joining it. So thank you for mentioning it. John von Neumann was probably one of the smartest people who ever lived. At least everyone seems to think so. I don't think any programming language can be learned in a day. I think you can learn and look at all the keywords in that language, the restricted words, the restricted identifiers even. And if you study computer programming languages carefully, which I'd recommend this book for what it's worth. So-called wizard book sometimes. It's free actually if you want to just go here. You really want to study computer programming. This is what I would do. Structure and interpretation of computer programs. What are you doing to me, Adobe? You can get the paperback edition, but it's free on MIT's website. And this has been the same introduction to programming book for MIT for many years. Python, there's a free Python book as well. One positive dude, good question. So each filing has a quarter, so to put them together you have to sort of make a sheet, and this is what professional investors do. It's called modeling, financial modeling. This is what hedge funds, private equity funds, mutual funds, any professional investor tends to do, to study how the financials move over time, kind of longitudinally. So anyway, and the SEC filings don't make it easy. Like for example, the cash flow statement is always presented in this very weird way, which makes you disaggregate them quarterly, which is a real pain. Thankfully, over time, you kind of get used to it. But all right. Okay, and so you can see cash flow from operations for Q2 was positive 119 million. So over these 2 quarters, the company made 330. So if I take 330, let's see, that's over 1/2. So I multiply by 2, and I would say I'd multiply by 30% since they're growing revenue by 10%, and probably all that drops to the bottom line. Let me do that and multiply that all by, say, 30 times earnings. And I get 25 billion valuation. let's keep that number in mind as we look at what the stock price is. As a matter of fact, let's look what the stock price is now. Let's go to Ansys stock, 263.27, 263.27, and we multiply that by the amount of shares. So the price per share times all the shares gives you the value of the company. And look at that, it's 23 billion, almost exactly the same price that I predicted. So it's good to cover up the stock price and see, well, based on your own estimate, what would you pay? I would pay 26 billion, and it's trading at 23 billion. That doesn't make it a bargain. Now, I've only been working on this for 15 minutes, so that doesn't give me a final answer, but it's an interesting back of the envelope, right? Oh, we can do programming, my dude. We can do programming. We can do React later. I got what you need. Come to Shkreli for all your needs. All right. So let's see, acquisitions. Looks like they bought a company in this quarter, really big, 247 million. I wonder who they bought. Maybe they'll buy me out someday. Or maybe I'll buy them out. It's a really good shortcut is Control R. You can see it as I'm right in here. If I press Control R, it'll copy the formula from this cell into the empty cell. So Control R, boom, equals sum of the 3 cells above me. Let me just show you one more time. Control R, and now that's copied right there. So I can go here and Control R. So when these numbers are set, the formulas will be set. Same thing here. Same thing here. Really fast, system. Poor Ape. Ape's going to have additional information. That's a different kind of halt. News pending. Huh. News pending. Help! Please don't short. Yeah, so Control C takes more time. So if you did Control C, you can do Control C. You do Control C, then Control V and Control V. It's extra keystrokes. You just do Control R. It's faster. It saves you a couple of keys. Not a big deal, but. All right, buyback. Minus 155, 571, minus this. So they didn't do any buybacks in that quarter because presumably they're buying the company they bought, whatever that acquisition was. Minus 1, 290, minus this. Okay, that makes sense. Everything adds up. Minus 21,039. And I again press Control R. So, did this all add up? Why did the change in cash, if you take these 3 numbers, not equal our kind of, let's see what our change in net cash, this is our own homebrew formula. Our change in net cash was, it should be roughly, they should be similar. So yeah, they were pretty similar. The cash flow statement had cash go down by 147 million, again mostly due to the acquisition. Our change in net cash was minus 40. So what accounts for that? 7 million in difference. Well, a lot of little things could account for it, so it's not that important. But if they were massively different, that'd be interesting, right? Okay. So we now should look at Q4. The problem with Q4 is the 10K has a lot of like, it's really not as same as the 10Q. In fact, at this point, I think we should probably go to their investor relations website and actually start looking at how they report earnings. So I just Googled Ansys investor relations, and I'm just going to go here. And every big company and every small company has kind of like a investor relations section. And here's the quarterly results. Let's see if we can find Q4's results. So there's quarterly accordion, whatever that is. So here's 2021 Q4 press release. I like how they laid this all out. Maybe we'll listen to this webcast while we Rock and roll. This is such a pain.
Ladies and gentlemen, thank you for standing by and welcome to the Ansys.
All right, let's take a look at
earnings conference call.
the Q4
With
results.
us today are Ajay Gopal, President and Chief Executive Officer, Nicole Anasina, Chief Financial Officer, and Kelsey DeBryan, Vice President, Investor Relations. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may
Can
press
I
star then
shrink
1
this
on
a
your
little
telephone
bit?
keypad. To withdraw your question,
What a
please
pain.
press star then 2. Please note this event is being recorded. At this time, I would like to turn the conference over to Ms. DeBryan for opening remarks. Please go ahead.
Good morning, everyone. Our earnings release, the related prepared remarks document, and the link to our second quarter 2022 Form 10-Q have all been posted on the homepage of our Investor Relations website. They contain the key financial information.
I love it when you have
and
GAAP and
supporting
non-GAAP
data
revenue that are different.
relative
To me,
our
that's
second
crazy.
Quarter financial results and business update, as well as our Q3 and updated fiscal year
Dua Lipa's in
2022
Albania?
outlook,
Show
and
me
the
your
key underlying quantitative and qualitative
Cool,
assumptions. Today's presentation contains forward-looking information. Important factors that may affect our future results are discussed in our public filings. Forward-looking statements are based upon our view of the business as of today, and Ansys undertakes no obligation to update any such information. During this call, we will be referring to non-GAAP financial measures
non-GAAP.
unless otherwise stated. A discussion of the various items that are excluded and reconciliations of GAAP to the comparable non-GAAP financial measures are included in our earnings release materials. I would now like to turn the call over to our President and CEO, Ajay Gopal, for his opening remarks. Ajay?
Good morning, everyone, and thank you for joining us. Q2 was yet another excellent quarter for Ansys, where we once again beat across our key metrics, including revenue, ACV, operating margin, and earnings per share. That, coupled with our healthy pipeline, gives us further confidence in the business and has enabled us to raise our full-year guidance on ACV and revenue in constant currency. Nicole will have the details in a few minutes. Our largest contract of the quarter was a 3-year, nearly $25 million agreement with an international electronics brand. This new contract includes Ansys solutions for semiconductors, electronics, fluids, as well as our learning hub to make users more familiar and productive with our
Look at the big
software.
Q4
By standardizing on
seasonality.
Ansys solutions, this customer expects to increase its product's yield while decreasing verification time for signal and power integrity. Another multi-million-dollar agreement in Q2 enables an international automotive OEM to expand its usage to include Ansys solutions for enterprise-level materials intelligence, electromagnetic interference,
Growth is a little
and
low.
autonomous driving. This customer has already realized up to 5x improvements in aerodynamics and thermal engineering productivity, a reduction of more than 40% in material properties acquisition costs, and a 10% improvement in hydrogen storage for its fuel cells. From a geographical perspective, we saw strong revenue growth from Asia Pacific
High
and
single
EMEA,
digits.
and the Americas came in as expected. Our 36% constant currency growth in revenue in Asia Pacific was thanks to several large contracts, including one with Murata Manufacturing, a Japanese company that specializes in electronic components. With Murata, the multi-year agreement spans our multiphysics portfolio and provides the company with an important thermal-aware system simulation flow for radio frequency modules. This solution is expected to provide faster thermal sign-off by reducing the number of redesigns and by improving the ease of use of Ansys products through a single interface. From an industry perspective, the high-tech and semiconductor, aerospace and defense, and automotive and ground transportation sectors were again our largest contributors. We also saw continued strength in the energy space, reflecting a mix of traditional and renewable use cases, as well as in the industrial equipment sector, where we recorded a number of multi-year agreements from companies around the world. For example, longtime customer WEG, a global leader in electrical engineering, power, and automation technology, signed a multi-year contract in Q2 to standardize on Ansys simulation. This new agreement will help the Brazilian company rethink its product development process by creating and implementing
GAAP to
digital
non-GAAP.
twins of its motors.
Looks
This agreement will drive WEG's electrification
like all the
and
adjustments
green
we've made
energy
ourselves.
initiatives. Now I'd like to briefly mention a different kind of customer success story.
Cool.
I would like to congratulate NASA and
NASA.
Northrop Grumman on the success of the James Webb Space Telescope.
Yeah.
We have all seen the stunning images that have come from this largest and most precise optical instrument ever developed. And we are proud here at Ansys for the role that we played in its creation.
That's pretty cool.
Naturally, it was impossible to physically test the entire mission before launch. And given the unforgiving environment of space, the mission had to run as expected the first time. Any error would have cost billions of dollars in expenses, with perhaps an even greater scientific loss. That is why the team developed the rocket, the telescope, and the entire mission in part using Ansys simulation.
Very cool.
With Ansys, engineers overcame a number of unique challenges, including folding a structure the size of a tennis court into a rocket and then unfolding it, and then understanding how perpetual solar radiation would affect its operations. Engineers used Ansys Mechanical to identify solutions to ensure the satellite's connected segmented mirror would behave the same way a monolithic mirror would. Our optical solutions were used to design and test each step in the mirror alignment process, from the initial segment search to the final phasing. In addition, mission planners used our digital mission engineering solutions to test variables that impact how the satellite is launched, and to determine how to keep the satellite
Right,
stationary.
there the growth is pretty good. So it looks pretty lumpy,
from Earth.
but 12%
And the results,
annual growth over the last 4
well, they're
quarters.
simply out of this world. Turning to our leadership in solutions for multiphysics simulation.
Oh, did you get what he said?
Our
Results
customers now
are
have access
out of this
to Ansys
world.
2022 Release 2,
I like
a
that.
comprehensive set of solutions and capabilities that cross physics, engineering disciplines, and industries. Included in this release are machine learning techniques in our core products, which are automatically optimizing repetitive processes, predicting workflows, and enhancing user productivity. We have also delivered artificial intelligence technology that enables customers to perform massive design optimization studies to arrive at an optimal design in a fraction of the time once required. This release also provides new high-performance computing capabilities and custom workflows for industry-specific applications, which will help more users address computationally complex problems by examining the impact of multiple physics at the same time. This added functionality is extending our multiphysics leadership while enabling customers to make their next-generation products a reality. I am also excited that TSMC recently certified Ansys Power Integrity software for its industry-leading N4P and N3E process technologies. The certification for Ansys RedHawk SC and Ansys Totem enables next-generation silicon designs for machine learning, connectivity, and high-performance computing applications. I'm also pleased to announce that Ansys has joined the Intel Foundry Services Cloud Alliance. Our electronics and semiconductor suite, which includes Ansys RedHawk SC, Ansys HFSS, and Ansys RaptorX, are available as part of the design flow that will help enable Intel customers to enhance their productivity. Rounding out our partner updates, Samsung Foundry has announced that it is using Ansys' industry-leading multi-physics solutions to develop designs on the most advanced chips, nodes, and process technologies. Using Ansys, Samsung Foundry will deliver a comprehensive design flow with greater capacity, speed, and integration capabilities for the company's most advanced semiconductor technology to boost high-speed connectivity while helping to reduce design error and risk. On our last call, I discussed the role that Ansys solutions are playing in our customers' sustainability initiatives, including for increasing fuel efficiency, in driving electrification, and in decreasing the rates of emissions. We have recently created a cross-functional center of excellence composed of members of our development and consulting teams to advance sustainability initiatives for our customers and partners. Our subject matter experts are focused on how Ansys simulation can help accelerate the creation of new, more efficient, and lower impact products beginning at the design and development phase. As part of our own sustainability endeavors, Ansys is committed to reducing our environmental footprint. To that end, we have announced that we have set a 15% reduction of Scope 1 and Scope 2 emissions by 2027. To hit that target, we are implementing projects identified in energy audits, including lighting enhancements and on-site renewable energy. We recently submitted to the Carbon Disclosure Project for the third year in a row and continue to enhance our task force on climate-related financial disclosures. I am also excited to announce that Fast Company has recognized several Ansys employees with its World Changing Ideas Award for the Ansys Minerva template. This template is built on our Minerva solution for simulation process and data management and provides an FDA-guided approval process for medical devices to speed potentially life-saving products
All
to
right.
patients more quickly.
We could take a break from Ansys.
I'm also proud that